Hey everyone, welcome back to the channel. Today we're diving deep into the world of hydrogen, specifically the electrolyzer side, which is the heart of green hydrogen production. If you've been around the clean energy space for a while, you remember the massive hype around 2021. Everyone wanted in on hydrogen, stocks were mooning, and it felt like the next big energy revolution was here. Fast forward to 2026, and the reality has been a lot slower and bumpier than promised. Projects have been delayed, costs stayed high, and many electrolyzer-linked stocks are still miles from their peaks. So, is this just a temporary pause, or has hydrogen lost its momentum? Let's look at the latest data from reports like IEA's Global Hydrogen Review, Hydrogen Council updates, and market forecasts to see where things stand in 2026 and beyond, and what it means for the sector's future. First, a quick recap of where we've been. Back in 2021, the narrative was explosive. Governments rolled out hydrogen strategies, billions in funding were announced, and electrolyzer manufacturers were seen as the new gold rush. The promise was clear. Green hydrogen produced via electrolysis could decarbonize hard-to-abate sectors like steel, chemicals, heavy transport, and long-duration energy storage. But execution hit roadblocks. High capex for electrolyzers, cheap gray hydrogen from natural gas still dominated, supply chains lagged, and policy support was slower than expected. Many flagship projects got delayed or scaled back, and investor enthusiasm cooled fast. Now in 2026, we're in a more pragmatic phase. The good news is that global electrolyzer manufacturing capacity has grown significantly, from just a few gigawatts a few years ago to tens of gigawatts in the pipeline, with major players ramping up production lines in Europe, North America, and especially China. Actual deployments are accelerating too. Low emissions, hydrogen production is still small, under 2 million tons per year globally, but committed projects could deliver 3 to 4 million tons annually by 2030, with a broader pipeline potentially reaching 9 to 14 million tons, if demand and financing align. The big question is the pace of growth. Forecasts vary, but credible sources point to steady, not explosive expansion in the near term. By 2030, global low-emissions hydrogen production is likely to hit 5 to 14 million tons per year. That's a solid increase from today's levels, but far short of the 80 to 100 million tons some early roadmaps targeted for net zero alignment. The real ramp-up is expected after 2030 to 2035. As costs fall, infrastructure builds out, and demand from industry and transport materializes. By 2050, scenarios range from 150 million tons to over 500 million tons, with electrolysis playing a central role in the green share. Now, zooming in on the electrolyzer market itself, this is where the action is for manufacturers. The global electrolyzer market is exploding in forecasts. Recent reports show massive CAGRs. One major analysis project from around $2 billion in 2025 to over $280 billion by 2033. 87% plus CAGR. Another study sees 59 to 98% CAGR. These numbers are eye-popping and reflect the expected massive scale-up in deployments. The drivers are falling stack costs, policy incentives, and big industrial commitments. Alkaline and PEM technologies lead, with solid oxide emerging for high-efficiency niches. Revenue growth for the sector as a whole is tied to installed capacity. If we hit even the lower-end forecasts, manufacturers will see order books fill rapidly. The market is still early stage, so volatility remains high. Many players are burning cash to scale factories, secure supply chains, and win contracts. But the direction is clear. Demand for electrolyzers is shifting from pilot projects to gigawatt-scale deployments, especially in Europe, North America, and Asia. So, does this mean hydrogen becomes huge in the coming years, with electrolyzer-linked stocks soaring to new highs? Not overnight. The next 5 years, 2026 to 2030, look like steady building. More FIDs, more factories online, costs dropping 30 to 50% in some cases, and production ramping to millions of tons. It's not the 2021 moonshot, but it's real progress. Beyond 2030 to 2035, if policies stay supportive and demand from hard-to-decarbonize sectors kicks in, hydrogen could become a multi-trillion-dollar energy pillar by 2050. Electrolyzer manufacturers stand to benefit massively as the backbone of green production, but execution risks, competition, and policy changes could keep things bumpy. The takeaway: hydrogen isn't dead, it's maturing from hype to reality. The growth trajectory is slower than promised, but the long-term potential is still enormous. Whether stocks explode again depends on hitting those capacity milestones and cost reductions. For now, it's a watch and build story. What do you think? Will electrolyzer demand surprise to the upside in the next few years, or are we still in for more delays? Drop your thoughts in the comments, like if this helped unpack the sector, and subscribe for more deep dives into clean energy trends. Catch you next time. Stay powered.